Hello, and welcome to my next NAP. NAP stands for Nonprofit Auditor Points, and I created NAPs to have a platform to discuss with nonprofits some accounting and auditing issues. These conversations, I really hope, help nonprofit community, specifically accounting departments, executive directors, outside bookkeeping firms, to demystify some accounting questions and auditing questions. And it will help all of us, including us as auditors and nonprofit sector, to better understand accrual accounting, have a proper financial statements based on accrual accounting, and this is my way of giving back to nonprofit community. My name is Irina Ryshkova and I am nonprofit auditor. Our office is located in downtown Oakland and we serve nonprofit organizations. We do provide assurance services and tax filing services for nonprofit organizations. Okay, let's start. Today we're going to talk about prepaids. Prepaids, sounds like a very simple concept, but it's very often not recorded correctly in small nonprofit organizations. Let's talk about prepaids and see how they should be properly presented on financials. Again, we're going to talk about an accrual method of accounting. On the cash method of accounting, there is no prepaids because once expenses are paid, they're cash out, so they're just expensed right away. So again, on accrual method of accounting, we do recognize expenses when they have been incurred. Prepaid expenses, by definition, it's a cash paid for future expenses, meaning that the organization going to benefit from these services in future. This expense has not been incurred yet. Therefore, if organization pays for future services or something that will be received in future goods, they have to be recorded not as an expense but as a prepaid, which is asset account and is recorded on a balance sheet. So for example, if today is December and the organization pays for January next month rent, the amount needs to be recorded as a prepaid. For example, the organization paid $5,000 for the rent for the next month's, which is January, but was paid in December. The journal entry will be made debit prepaid expense, which is asset, and credit cash. When the organization will get to the next month's January, this entry needs to be reversed. Now, at the end of the January, organization used that amount, and the entry would be debit rent expense and credit prepaid expense for $5,000. So it will be a reduction of the prepaid. It was a simple example because it just concerned 1 month. But there is a lot of prepaids that nonprofit made that affect multiple even years or multiple months. Very common prepaid expense that might affect actually 12 months or 24 months, it's various insurance expenses. A lot of time the organization prepaid insurance for the whole year ahead of time. Therefore, when the insurance is paid, it needs to be recorded as a prepaid and the amount needs to be amortized over the period of the coverage. For example, if the insurance covers 12 months period, the organization is on a calendar year, let's just assume December 31st, and the organization paid insurance for 12 months in June 30 for the full amount of $2,400. So it covers 12 months for $2,400, meaning $200 a month. Therefore, the full amount, once it was paid in June, needs to be recorded as a prepaid debit prepaid and credit cash. And then every month, the organization needs to amortize this insurance prepaid by crediting prepaid insurance $200 and debiting insurance expense. The recording of prepaid expenses are very critical because the main principle of accrual accounting is matching. It means that the effort that organization puts and benefits that organization receives needs to match expenses with the revenue. And because service insurance coverage has not been incurred yet, it's not matching the actual coverage and actual effort. Therefore, it cannot be recorded as an expense. What are most common prepaid insurances? Typically, not a lot of nonprofit prepaid vendors, they do require payments ahead of coverage, which is insurance, rent expense, typically also prepaid. Membership expenses can be also prepaid. For example, the organization can prepay for subscriptions for software or for membership ahead of for a year or sometimes 2 years. You can pay, nonprofits can pay for subscriptions for magazine or even prepay for some future participation in events that will take place in future. So all these amounts are prepaid and very commonly recorded as a prepaid expenses and should be amortized. Very common what we see in nonprofit organizations that prepaids recorded correctly, however, they are left not being amortized, or at some point amortization expense stop being recorded. Therefore, balance of prepaids are not recorded correctly at the end of the year. It is highly recommended to develop this system where all prepaid amounts are recorded when they were paid, the period that they cover are stated as well, and the amortization table is created. And then using this schedule, the organization can record amortization expense correctly every month. Nonprofits need to make sure that the amounts eventually completely amortized, so they become zero. So the amounts are not just carry over incorrectly. So the prepaid expenses, because it's an asset account, it will increase on the debit side, and once it's amortized, it will be credited, and eventually amount will become a zero, meaning that prepaid expense was fully used and there is no more amount left to be amortized. So this is the main points about the prepaid expenses, how they need to be recorded, and why it's very critical that they not expense right away, because otherwise they will distort the presentation of financial statements and will not follow GAAP rules about matching and accrual method of accounting. Thank you so much. Looking forward to see you for the next NAP. Thank you.